Well, Susannah Streeter is Head of Money and Markets for Hargreaves Lansdown. Good to see you again, Susannah. So, worth saying again, perhaps, that SVB, not a consumer bank, it's a bank that provides financing to tech companies, particularly startups. What do these kind of businesses need that they can get from a specialised bank like SVB?
Well, the reason why SVB saw its coffers swell before this all happened, of course, particularly during the era of ultra cheap money, was because some of these tech companies found it more difficult to perhaps access banking activities with the other more mainstream banks. And really, SVB really did cater for the tech industry. So what happened is that once they got their funding from the venture capitalist community, that meant that they banked it with SVB. And unfortunately, it was the business model of SVB which came unstuck because it wanted to make money from all those huge deposits and so put them into long-dated treasury bonds, so US treasuries, so government debt. And unfortunately, because interest rates went up so rapidly, you saw the value of those holdings plummet. And then there were these real concerns that actually it wouldn't have enough money to cover depositors. And that's why you saw effectively this run on the bank. Now, it's likely that other banking institutions will take on that business. Certainly, we've seen it here in the UK with HSBC doing so. But I think what tech companies are going to be doing right now is making sure that their banking activities are much more diversified. So they're not putting all of their eggs in one basket and risking seeing their deposits evaporate. Of course, there is this backstop now from the US Treasury, which did go some way to calm worries earlier today. But as we've been hearing, I think that confidence has evaporated as we've got now uncertainty surrounding other smaller banks.
So if we do lose more banks like SVB, how will that change the banking landscape and options for the kind of startups that had their money in them?
Well, certainly they're going to have to look elsewhere. And at the moment, the environment in terms of raising new funding is very difficult, is much more difficult for tech companies. The era of cheap money is at an end. Certainly, they may well find it more of a struggle to get the loans that they need. I think, though, now the focus has moved away from the ramifications for tech back towards the ramifications for the banking industry. Because what we've seen, there was mention there about the rollback of the Dodd-Frank regulations. Well, that actually came during the Trump administration. They specifically dismantled some of the checks and balances around those medium to small regional banks. And now it seems as though the chickens are coming home to roost because the stress tests were removed. They didn't have such high requirements. And that is why you heard President Biden today saying that he was going to go back to Congress and look at toughening up the legislation, because clearly there have been real weaknesses exposed through this, and we still don't yet know the full ramifications.
So as well as trying to sort out the regulations, President Biden obviously wanting to restore confidence, but do you think his message was strong enough to reassure the markets?
It certainly didn't do the trick of restoring confidence. There is still a lot of nervousness around, and that's what you're seeing reflected in the sharp share price falls that we've seen, particularly for those regional banks that I mentioned, First Republic, for example, really plummeting in value, and also some of the bigger banks as well. There is a lot of uncertainty still hanging around. However, if you look across the wider market, interestingly, say the S&P 500 is much more supported, because now there is this expectation that actually the Federal Reserve will have to focus on financial stability. And so the prospect of the Fed raising interest rates more steeply, which was priced in just a week ago, is now evaporating. And there are expectations that it will press pause or go ultra slowly with further rate rises. And that is supporting the wider market. But it does show that there is a lot of nervousness around, to the extent that the Fed may reverse its policies.
Susannah, great to get your thoughts today. Thank you for joining us. That's Susannah Streeter from Hargreaves Lansdown.